Coming up today, stocks continue to rally as Wall Street shakes off the Middle East conflict. Should we worry about tariffs again? AOC comes after Trump, pressure building on J Powell to cut rates, a massive volatility crash, and why nothing stops the Wall Street train. You're going to enjoy this one, guys. Let's go. Well, it looks like the gravy train is back here again on Wall Street, with the market melting up pretty much across the board today, except for energy, oil, and gas, with crude oil still pulling back, along with a pullback in the defense contractors, and a bit of a pause for the rally there in Tesla. After a successful robo-taxi launch on the weekend, and it was really some of the biggest tech stocks, Oracle, Palantir, and the chips, breaking out there today, now pushing the fear and greed index back into the greed zone. But only just. Even though markets are breaking out, we're still not at extreme overbought technical conditions. And just looking at trending stocks on the Yahoo Finance leaderboard, it is a sea of green out there today. In fact, no red. We got some really big moves happening I'm going to show you on the charts later, like Coinbase, smaller AI stocks like Big Bear breaking out, and other favorites like Nuclear. Robinhood up over 7%, along with a range of other sectors. In fact, the Nasdaq 100 just closed at a record high, 22,190. It's never closed that high before in its history. And the S&P 500 just a little over 50 points away from it hitting an all-time high as well. And just looking at my sector trends table indicator, just about a bullish setup as you'll get. Green in all the places you want to see it, and red in all the places you want to see it. We've got volatility coming off hard today, bond yields sharply lower, oil and gold trending down, along with the dollar and inflation expectations. And even though we've got a bit of a fragile truce between Israel and Iran that seems to be holding for now, even though there were reports of missiles being fired at each other, the market doesn't care about that anymore. It's a nothing burger now. Also, some indications from the Fed, they could be getting ready to cut rates, or at least the pressure is building on them, and that puts us squarely back into a soft landing scenario. And just looking at some data of the GMI weighted global economic versus inflation surprise index with a 5-month lead has a really strong correlation with the Nasdaq year-over-year chain. And that's suggesting we could be on the cusp of a much larger and further rally for Nasdaq tech stocks going into 2026. And now that this V-shaped recovery is firming up at all-time highs, it appears we could be following a path similar to that of the late 90s, in which there was a sharp sell-off in 98, which convinced many people that the bull market was over, just like we had a couple of months ago. Record pessimism and bearishness, the highest we've seen since the GFC. We've now raced back to all-time highs, and there could be a lot further to go as well, especially considering big money institutions all around the world bailed on USD assets so far this year. In fact, looking at global fund managers, they're still the most underweight on US stocks more than anything else, and they had been piling in to Euro stocks, which are still well out in front in year-to-date returns. And just looking at the spread of the spider versus the Euro stocks ETF, we are sitting just below multi-month highs, and this very well may have based out. And the US comeback trade could be just about to kick off. And just looking at some seasonal patterns, if the market finishes higher in May and June, which it looks like it's about to do, that typically bodes well for the remainder of the year. Final 6 months, higher 93% of the time, and with pretty good average gains there as well, just below 9%. That's a bit better than average, but the skepticism is still there. We are climbing a huge wall of worry. No doubt there's risks all over the place. Softening macro indicators, geopolitical tensions, inflation, you name it. But what can overwhelm all of that is momentum. If people simply keep buying stocks, it doesn't matter what the news is, it can keep tracking higher. But Wall Street is still unsure on the back of the latest conflict we've seen in the Middle East, which appears to be getting dialed down at this current point of time. But we've got Goldman Sachs and other banks warning of recession risks if global oil supply is disrupted. But that's looking unlikely now, given that pretty much all of Iranian oil goes to China. And China's already warned them, don't do anything to the Strait of Hormuz. So I don't think they want to bite the hand that feeds them, not to mention all of Iran's neighbors already upset at them for what they've been doing. And what about tariffs? We still don't have official deals with major trading partners yet, pretty much just the UK, whilst the big one with China is still on the table. As we quickly approach the 9th of July deadline, when the 90-day pause expires, however, that's likely to be extended, and the market's largely digested that. What about other political drama? Some Democrats hoping for a third time lucky, trying to kick Trump out of office, with AOC not giving up, trying to impeach him again after she said the Iran strikes were impeachable. Apparently she's not happy with Iran's nuclear program being dismantled, and who knows, maybe a federal judge will order Trump to rebuild it. And if you want to read one of the best rants from the president, then pause your video player, as this one keeps getting better as it goes on. Trump not willing to take a bar of it, strongly pushing back on these fresh calls for impeachment, which I don't think think will happen. It's all just a bit of a sideshow, as they'll continually try and bring him down, no matter the cost to the country. On the other hand, it was interesting to see yesterday the world's official highest IQ record holder, Young-hoon Kim, out of South Korea. Apparently with an IQ of 276, came out and said, I believe the higher your IQ, the more likely you are to support President Trump. Even going as far today, call on the Nobel Prize Committee to award him the Nobel Peace Prize. But in addition to AOC, who else definitely doesn't see eye to eye with the president? The Federal Reserve Chairman, Jay Powell, still trying to hold on to his wait-and-see posture, as he's not willing to give strong indication that he's willing to cut rates. And as we heard from him today, if not for the expectations of higher inflation this year from tariffs, we would have continued cutting, actually admitting that he would keep cutting rates if it weren't for his new speculation of what tariffs could do. For 8 years, he's been reactive to data. Now, all of a sudden, he's trying to be proactive. But if he's keeping millions of consumers struggling with higher rates and basing interest rate decisions on expectations, well, they've started coming down sharply of late as well, because the fact is, tariffs are not causing any increase in inflation. It just simply hasn't shown up in the data. Maybe what really caused inflation was the Fed flooding markets with $9 trillion in liquidity, instead of trade agreements with other countries currently being negotiated. And Jay actually admitting the majority of his members feel it's appropriate to cut rates later this year. And so to interest rate traders, now pricing in 85% chance we'll see a cut in September. And even thinking by the end of the year, the overnight rate will be around 3.5%. And that's why I shared with my members today in our chat room. I just increased my bet that the Fed will cut rates in September. Given the huge discrepancy between the odds on Fed fund futures, currently at 70%, and I was able to average in at 46%. And I've also got a hedge in for a potential cut next month, even though I think that's still very much unlikely at this stage. The pressure is building on them, even from within the Fed. And so just in case they cut rates next month, but not September, I'll be hedged on my September bet. And who knows? It's always possible they could cut both next month and September, which would work out great for me as well. But the data is there for them to already be cutting if it weren't for Jay Powell's speculation on what tariffs might do. And so the market writing off what's going on in the Middle East as a nothing burger that the US has well and truly under control, even if it were to escalate. The odds of the Strait of Hormuz being closed down have dropped dramatically, and what also dropped dramatically today was the price of option, the volatility index, getting a massive volatility crush as markets approach all-time highs. And we can see that here on the chart, now on a 17 handle, getting back to steep contango in the term structure. And that's a pretty bullish indication from the options market that they don't forecast any significant rise in volatility anytime soon. In fact, we've got the VIX one day getting back to lows on an 11 handle. Whilst government bond yields continue their pullback as well. Now got the 2-year at 382 and a healthy gap with where the Fed's at. And that's causing a little bit of a bid. And long-dated Treasury bond ETF, TLT, once again inching up a little here today, along with high-yield bonds. Credit market feeling pretty good. And the dollar's still soft, still in a technical downtrend here, whilst Bitcoin has quickly reclaimed its 50-day VWAP. Looking pretty firm. And just looking at my themes watch list, which you can download for free. Just click the link below this video and you'll get this watch list of 180 stocks in your trading view as well. Seen a good rip there today in robotic shares and nuclear. Really strong bounce back in all of these names that we're tracking here. SMR. Good volume as well. Nice bounce back in the solar stocks, beaten down last week on the back of that bill being passed in the Senate. Appeared to be overdone. We've got Sunrun up 15% today. Battery EV stocks rallying and space as well. Rocket Lab breaking out to multi-month highs. Black Sky continuing to push up, and just look at that run in AST Space Mobile. Absolutely incredible. Nvidia ticking up just a couple of points away from all-time highs. Taiwan Semi as well, and some big rips in smaller AI names like Big Bear AI. Ava Technologies continuing to melt up, but Quantum still a little bit soft and pulling back here. And it looks like some of the heat is coming out of the hottest stock this last week, Circle, stablecoin provider, coming off 15% today, whilst Coinbase is up 12%. As I noted yesterday, bit of a discrepancy between the valuation between the two, considering Coinbase gets 50% of Circle's revenue from their USDC reserves, and there's just been huge volume coming into Coinbase. Still with a market cap of 87 billion, and I could see this easily trading up to 150 billion or so come Christmas this year. Another stock I'm long, Sezzle, on absolute fire, up another 10% today, and some others like Reddit potentially shaping up to break out as well, and Robinhood also closing at all-time highs as retail trading is on fire. Along with the stock I told you guys yesterday to keep an eye on, that could be retail traders' next favorite stock, Hinge Health, up over 7% today. Another one of my favorite stocks I'm long, Uber, having a great day, up 7.5%. As my my list of the new Mag 7 continues to perform well and outperform the traditional Mag 7, which are still a little subdued in trading here. Just calling up on low ranges, pulling back. Apple being the softest of them all, and a little bit of a pullback there in Tesla after a successful robo-taxi launch. Screamed out of the gate yesterday, but hitting a little bit of a resistance here today. But quite often you'll find it to stop and catch its breath before continuing higher. And that's pretty much a wrap for the daily market review today. It's a quick one. We don't have too many big headlines or events, just the market grinding and melting higher here. As like I said, momentum may have taken over regardless of the headlines and data. And we can see that with all these retail favorites just ripping up on volume, really benefiting companies like Robinhood. And now with the NASDAQ closing at all-time highs, we're back to blue sky territory. And my thesis of the great melt-up could be playing out. And we could be moving to that last year or two of this 15-year secular bull market, potentially longer, taking us through to 2030, as we do have a lot of new exciting technologies right here on our doorstep and around the corner with AI, robo-taxis, humanoids, space exploration. The list goes on. There's plenty of reason for investors to be excited. And now with accessibility to the market at all-time highs, there's just no reason why it can't keep melting up, especially if the Fed can and should cut rates soon. Just makes stocks more appealing relative to bonds, and it lowers the cost of capital for both consumers and businesses, increasing the return on investment. And since the market had plenty of reason for a rug pull on those fear-inducing headlines over the weekend, but didn't, every little dip is getting bought. Like I always say, the technicals lead and the fundamentals follow, and you don't want to short a market breaking out to all-time highs. Otherwise, looking out the rest of the week, we've just got PCE inflation on Friday. As long as there's no surprises there, markets should be able to keep pricing in increased odds that the Fed can cut, who knows, maybe next month, or what I think is likely September. And hence, why I'm betting on that. That's all for today. Thanks very much for sticking with Click Capital, and I'll see you back here again this time tomorrow. Cheers.